The fund sector review of 2030 kicked off in April of 2023, with the main aim being to maintain Ireland's global reputation as a leader in the asset management industry and to further build on the resilience within the industry for the future. The review focuses on a number of key sectors within the industry, one being the enhancement of the ELTIF regime and what that might bring to the industry in Ireland in particular. We also look at the investment limited partnership as part of the review, and again, how we can compete in the wider funds industry in terms of attracting those types of funds to Ireland. The role that technology is going to play is also under review, as well as the risks that the delegation model poses to the industry in terms of both the AIFMD and the UCITS regimes. And finally, there's also a focus on ESG in the Irish context and what can be done in terms of the social and governance components of that regime, so that genuine consideration is given to those elements as well. The consultation period for the review ended in September of 2023, and we look forward to the report being issued this summer. In April of 2023, the Central Bank confirmed that QAIFs are now permitted to invest in digital assets. This was very much welcomed by the funds industry and offers an opportunity for managers to further diversify portfolios and hopefully make bigger returns. However, while the Central Bank has eased the pre-submission processes that funds that wish to indirectly invest in digital assets need to take, there remain very strict requirements in terms of the risk management framework that's used, as well as the disclosure within fund documentation. One important thing to note is that the ability to invest in this new asset class is restricted to professional investors, as the Central Bank remains quite cautious in terms of the risks posed to retail funds and retail investors when they invest in digital assets. So we continue to watch this space with great interest.
There are some recent developments in the investment fund space. Some of these are more immediate and others are ones to keep an eye out for over the coming months and years. The first development I'll mention is the introduction of the Individual Accountability Framework, and that framework became live in December of 2023. Our clients are currently looking at updating their policies and procedures to account for the new framework. They're engaging with the PCFs and CFs within their firms to make sure that, one, they're identified clearly as PCFs and CFs that are subject to the conduct standards, as well as making them aware of what the conduct standards entail. Firms are also engaging with training for those individuals in terms of their obligations and the conduct standards themselves. And firms are also looking at making sure that the relevant employment contracts or letters of appointment with various PCFs and CFs are fit for purpose. Firms are also looking at their fitness and probity procedures, and in particular are updating those to account for the new certification framework, and they're also updating those where relevant to account for increased due diligence requirements. The second development I mention relate to changes to the European Long-Term Investment Fund, or the ELTIF. The changes are proposed to address some of the features of the existing ELTIF regime which have made it less attractive than other fund products. So it's proposed that the investment universe for ELTIFs will be expanded, some of the investment restrictions will be relaxed, and in addition, retail investors will be able to invest in ELTIFs. The Central Bank has proposed some amendments to the AIF rulebook to account for the new ELTIF regime, in order to facilitate the authorisation of Irish ELTIFs. The last development I'll mention is AIFMD II. And while it's early days, a provisional agreement was reached between the various EU legislative bodies in November 2023 on proposed amendments to the AIFMD framework. The proposal looks at amendments to the delegation framework, the harmonisation of liquidity management tools, and the introduction of a framework for loan origination funds. As I said, it's early days and it's unlikely that we'll have an operational framework until at least 2026, but it's one to watch for the future.